Good morning, everyone, and time for once again for a look at the daily plan for SPX today. And today, before we talk about yesterday, before doing a brief review, what we have today is quarterly OPEX Q4 options expiration for the SPX 500. You'll see the hyperbolic posts on Twitter, whatever. Largest expiration in the history of the universe, whatever. Well, yeah, just like the quarterback salary keeps going up and up, the volume gets bigger. Q4 is always the biggest SPX option expiration. Most of it's out of the money and doesn't matter, or way in the money and doesn't matter. What really matters is roughly the same notional that always matters. To me, it looks like a little less, but that doesn't get the clicks as much as largest expiration in the history of the universe to infinity and beyond. So you're going to see those out there. So click those and pay attention to those. That said, so we have AM expiration and PM expiration. I'll just do a brief mention of that and circle back around to it. Okay. So what that means is the SPX options have two different expiries in the for the monthlies. The AM, which you can now trade until 9/25, used to be until September that they settled out on Thursday, and we had to wait for the official opening price, which can sometimes take a half hour after we open to figure out how those get hedged out. And so sometimes, although they're hedged out mostly by now or by 9:30, then there's kind of additional monkey business to kind of fix whatever was broken in that process. Okay. So now they changed it till we can do the monkey business till 9:25, but still takes can take up to a half hour for the official price to be printed. And then there's this other arcane process called the SET, wherein at I forget what time, 9:25 or sometime in the morning, market makers basically place their bets at what the opening price is going to be. And they place their bets with their dollars. That's how they hedge it out. And then sometimes they're right, sometimes they're wrong. It's obviously going to be wrong by a little bit. And so there's this whole crazy process that goes on into this opening. So the opening could be a little funny, or it could just look like a normal opening. We really don't know how it's going to shake out, but I'm just saying that to say this: if stuff looks funny, that's why. And so, you might want to give it a little time. I thought we had PCE at 8:30, and I'm not seeing. Oh, here we go. No. Well, I'm not seeing a 10-point down red bar, so I'm taking that as at least okay.
Doc, I didn't have PCE today. Did you?
At 8:30? Am I correct? Huh?
I didn't have it on my log for PCE.
Oh, okay, so maybe I'm lying. Okay, yeah. Never mind. We don't have PCE. We have Michigan Consumer Sentiment at 10.
10, yeah. And then we have, it's OPEX all day, like you just said, but those are the two things on our event calendar.
Okay, so I was wrong. I must have had a wrong calendar. Okay. Ignore that on my notes. I was wrong. No PCE. So that makes it that makes it a little better. We don't have, there's one less variable to screw around with in the, like there's not enough variables, right? Okay, so yesterday was a fun day. As my old TA mentor used to say, price void down, price void back up, and that's what we got. That's what we got. Just, regular TA stuff, really, nothing fancy. I'm not going to go over the whole option positioning thing from yesterday. I don't have the screen up, and let's just kind of stay where we are right now. And to do that, let me switch to options depth. I think I put a discount link in there in the chat here. Now, I don't know if the same, when I put something in the chat here, if that goes to Twitter also, if it just goes to YouTube, I don't know. But we'll figure that out. I've only been doing this for like a year. I'll figure it out eventually. And so here's where we are. We're roughly 67, 85-ish, 70. We're somewhere in here a little green from yesterday's close. Okay. Now, based on looking at this and a little quantuition, it seems to me like the balance for the opening, all things being equal, should be around the 1790-ish area, maybe 60. I think we should just miss the 6,800. I mean, actually, wait, am I looking at the right? No, I'm looking at the wrong thing. That's why. That's why it doesn't show it right. That's why it looked wrong. No, that is right. Okay. Right. No, hold on. Something looks wrong here. Hold on. Something looks wrong here. Okay. I thought this was 6790. Okay, so it's 6700. Let me go to my annotated one. It'll be easier that way. Not the slickest of presentations, but hey. If you guys wanted slick presentations, you wouldn't be listening to me. Yeah, it is the same one. Okay. So here's the AM settlement. Looks to me like, and this is in my Discord with commentary and all that. Looks to me like this is the balance area where we should settle at. And we're kind of over here, kind of get a little pull up here, but we have the pushback from the 6,800 market maker long. We have this little zone here. It looks to me we should settle out here. Okay, fine. After we settle out here, what then? Here's what then. You like all those? Here's what then. All right, let's talk about this real quick. So, as many of you who've been listening to this are aware, to the right is market makers are long, and so as we head up, I thought you have the arrows the other way. As we head up, market makers have to sell, but as we head down, then they have to buy to balance out that delta here to stay neutral. The opposite here, as we head down, they buy, but if we move back away, they sell, trying to find the balance. When you have two bars of equal size like this, pretending there's nothing in the middle, and the middle is kind of equal as well here, so you kind of just sort of find a natural balance in there, in between, equal size bars. We have kind of equal size bars on either side here, so if we're below 67.35-ish, we should find balance that kind of right in the middle here. The main action Jackson zone is 67.35-ish. The expected move based on options prices was 67.40 when I looked in the morning, 67.50 for government work, round number, which is right here. And this is where most of the action should be. If we could fight our way through 6,800 to 68.15, where the IC Whale, who is back, IC Whale is somebody who has a service in a small hedge fund that sells iron condors, 5 wide, always sells his calls too close, in my opinion. He tends to get skewered on the call side more than the put side if he gets harpooned. And the reason is, I think, a logic flaw. I think he looks to get roughly equal premium from the puts and the calls. Because of his standard put call skew, he's going to be selling about a 22 to 25 delta call within the expected move, and he's going to be selling puts around the 16 or 18 delta put outside the expected move. And guess what? That's where he kind of gets skewered. But whatever. If you're going to do something like that, Mr. Whale, I would suggest using delta as your guidepost, not premium, or expected move If you want to sell the expected move, not the premium, if that's your strategy. But anyway, I digress. And my offer is still good. I offer you a free month subscription if you want to like learn how to do this. Anyway, I'm just screwing around here, folks. Okay, so if we can fight our way through the 5 to 15 area through here, then we have a path, through his long call up to this 35-40 area. Up above 50, we have some stuff sold, but there's not a lot. I mean, we have a cluster, so it's enough to kind of slow us down. I don't think we get there, but I got to put it on there. That's like I don't think we get to 6,700, but recent history tells us we might. So that's kind of the range. So it's kind of relatively simple, I think. Let's go to the AM, to the PM rather. And here's the PM. So here's where we have the IC whale at 15 and 20. Over the 15 and 20, here's this path right up to 50. There's a path. Right now, we're in this thin zone, same thin zone we had in the AM. We're in this thin zone, a little lower here, between 30 and 6,800. Thin zone. Anything could happen from a gamma point of view. That's where TA guys like Bad Hombre come in and help us dance between the raindrops. Pretty solid support down here where he sold his puts, the 67.30 to 20 area. Here's his 67.20 to, here's his 5 wide. And then below that, there's really nothing to speak of. And that's kind of the landscape. So once the AM is gone, I showed you that before, this is what we're dealt with. On top of that, we have the YLD family of funds, and yesterday I talked about them buying back their NDX in the money calls. There was zero volume there. I checked whatever resources I could check, and nobody knows how come. There was no change in their prospectus, no news, no anything. So maybe a data glitch. I don't know if anybody knows why it showed zero volume there when we know there was 4,000 volume there. I checked on Toss, I checked on bar charts, I checked on Tasty. Nobody had it. So anyway, there's that. So today they will be selling roughly 6 billion, I think just 6 billion in SPX and another whatever billion. And they'll be selling a lot of at the money calls for the January AM expiration in NDX, which is the Qs, which is our tech stocks, in SPX, which is our favorite here, and in RUT, IWM, honorable mention. And that negative delta coming in tends to have a suppressive effect. Doesn't mean we can't go up. And it happens around 11:30 till 2. They take VWAP or TWAP, time weighted out price of, and they use that as what they try to sell. Do they succeed in it? No. When you look at it, it's all over the place. But that's kind of like according to their prospectus, whatever. That's what they try to do. And they sell them usually in tranches of 50 or 100 or 93, these weird tranches. And so they start trickling in during the day. So sometimes, just because it's cumulative and a slow trickle, it doesn't do much. Every once in a while, you kind of get a funny slam where it just tends to have a suppressive effect. Like I said, doesn't mean we can't go up. Usually it's a 0.1%, 0.2%. So if we were supposed to be up, quote unquote, 0.6, we're up 0.5. But if you're trading, that little stuff kind of matters where the edge is. And also, Japan did their Japan interest rates. They raised rates to the highest in the last 30 years, whatever, and nobody seems to care, so I don't care.
Yeah.
So all the doomsayers on Twitter were, Japan's going to raise rates, watch out. So they raised rates, and okay. Apparently, it's been telegraphed for like a year,
Yeah.
So I think we've kind of got that figured out by now, and whatever the macro bro algos have done, they've done. But who knows? More will be revealed, and that's it. So now let me get my stuff off. And whoops, I hit the wrong thing. Let me add this. I don't know what happened to VolTrader. But go ahead, take it away, young fella.
All right, guys. So what I'm interested in to start us off today is this internal pivot I have marked at 68.35, right in here. If we close below, or if we open below it at open, then I'll expect kind of a push down for some longs down in this area here from 68.23 to 68.18. That's an area where I'm considering going long. Should we get a little spillage downward, 68.07 to 68.01 is also a nice area where I'd consider going long. But I see us coming back into the range and just kind of ping-ponging through here most of the day. As I'm seeing my charts, I think we're really set up for a nice kind of consolidation move today, consolidation or sideways movement, whatever you want to call it. I think that's what we're looking for, and I think we will likely see a breakout today, if I had to guess, to the upside. Which is funny because I was beginning of the week I was bearish into OPEX, but I think the move already happened. This is my ceiling for today, 68.55, 54 area. I think if we can push up here, we'll have a nice area to short for I don't know, call it.
So that's roughly yesterday's high-ish.
Hold on, I can't see with this. Yeah, pre-market high. Right, no, this is today's pre-market high. Yesterday's high came to
okay, today's pre-market high. Okay.
That's where I'm looking for the reject of today.
So that's right near the IC whale. So you're trying to help the IC whale out there.
Oh, nice, good. He helps us, we help him, I guess. So that's a reject I have. One level that I want to share, because obviously I only have so much screen space, is up here, 69.30, 28. I don't think we get up there today, obviously, but just in case we do, that in my opinion is a good area to look for a reject, a stall. Don't think we get up there. I think that was a high of Monday. Yeah, around Monday's high. So pretty interested in that level. Again, I don't think that level we'll see it today, but just in case we do, anything crazy can happen. I'm going to be a little bit patient to trade OPEX just because I want to see a trend or a lack thereof. And if there's a lack thereof, I'll probably stay out of it. But that's my game plan for today.
Okay. Give me 1 second. I'm doing something behind the scenes here, so to speak.
Bet, Ombre, I have a question. I chatted with you a little bit yesterday, and these levels that you're generating are, they're not necessarily technical. They're based on a system that you use.
Yeah, so they're not actually levels. I plot them as levels for you guys to see. But I trade price action, and based on my price action system, these are areas that I potentially will look for. The way I think about it is, if you're long, you want to look for areas where there's sellers. If you're short, you want to look for areas where there's buyers, right? To potentially take profit or to close your position. And that's where these levels come from, areas of potential buyers or sellers.
So is it based on, I'm just curious, without going too into the weeds, is it kind of based on look left where the buyers and sellers showed up before, or is there like a volume component, or time spent at that area component?
Both.
You're wrapped into that.
I'd say both.
Oh, okay. All of the
Yeah.
above.
Uh-huh.
That sounds complicated. Like pool. Okay.
But
All
the
right,
presentation
so-
is easy.
Yeah.
That's the key. The presentation is easy, and a very brief explanation of what his trade plan is for the day. My question was just kind of pointing out, what's the secret sauce here? What is he using? Not necessarily to share any proprietary stuff, but just to let people know it's not just based on technical analysis.
Yeah, and there is an indicator I developed. I mean, you get it if you do the boot camp, but it's a big part of it. It shows you certain levels based on certain things, and we were able to code a lot of my strategy into an indicator. So it just makes it a little easier for anyone trading my system.
And the boot camp is available through
whoop.com/OptionScale. Yep.
All right, fantastic.
And just to let you guys know, I'm a day trader, right? So I'm not looking to hold from the bounce to the reject or anything like that. I'm looking for, okay, we come down here. I'm looking for an entry to long, 10, 15 points. I'm good. Now on to the next trade.
So your average hold time, if you had to say, what, a half hour, an hour, 5 minutes, 2 hours?
I'd say average is probably 8 to 10 minutes.
8 to 10 minutes. Okay. So what one might classify more as a scalper.
Yeah, definitely.
Right.
Not a micro scalper. I'm not in there for 1 point, 2 points, but definitely short period trades. Yeah.
Right.
And just so folks know, I know there's a lot of subs who watch Doc's live stream, but Bad Hombre has his own voice channel.
Yeah, sometimes I'll drop a Zoom. Sometimes I'll be in the Discord voice, and then I think it was Wednesday I went into the Doc's room.
Yeah. That was good. That was good. That was good.
I like to trade when I have an edge, not when I don't. So if you don't see me, it's because I'm not taking trades.
Hold on, I want to see something. I was looking into see if there's anything in your futures chat that would be interesting for the folks to see, but no. I say,
well, the P&L shares, those are kind of interesting.
All right, well, let's see. Hold on.
I've been enjoying hanging out in Doc Stream. There's some good folks in there, and
so here's. I'm sorry.
No, go ahead.
So here's Bad Hombre's old channel. Like I say, the usual fun memes because you can't. It's a boys' locker room in there, which is what it's supposed to be, right? Oh, there you go. Well, this is our flow specialist.
Yeah, he had a good trade overnight too. I think he made $3,000. It's in there at the bottom.
And what's this here? Oh shit, $4,000. That's a Bad Hombre. That's why it's a Bad Hombre. Let's see what else we got here. And then it gets more banter. All right, our flow guy again, $800. Very nice. What else do we got going on here? Oh, look at this. $6,000. Okay, so people are making money, it looks like.
Oh, yeah.
Yeah. Anyway, so if you're interested in that, and Bad Hombre has a course, and we'll be doing a whole system, whatever, and we'll be doing a stocking stuffer or whatever you want to call it, a Hanukkah menorah present. We'll make it an 8-day trial instead of a 7-day trial for the 8 days of Hanukkah.
That's right.
If we can figure out how to do that. Yeah, right. Enough joking around. And so here we had retail sales numbers and they came out and there's the whale. See it. We had retail sales numbers and I guess they were okay because they were okay. Not shocking to me, just like casually watching earnings because I'm an old stock trader. Retail earnings have been coming in good, just like the broader sectors. And so, it doesn't surprise me. Inflation is coming down. I know you're not supposed to say that. Inflation is coming down. And so, we'll see. Oh, interesting note. Who was it? I don't know if it was Goldman or Nomura. One of those gurus was saying that quality growth, AI, whatever you want to call it, with a lot of money, basically your mag companies are a good trade going forward into 2026 because of the interest rate environment, liquidity, whatever they explain, the macro stuff. It made sense, but I don't really care about the macro stuff, but kind of made sense. And so, maybe they know more than me. I don't know. I kind of agree based on what I know. Okay, so there's that. And maybe I'll do a deep dive on it and write an article if I feel like it. Okay, moving on to some trade ideas, right, folks? Like trade ideas. We're here to make money. So first, let me tell you something. So here was my version of the IC whale trade that I did yesterday in the morning. The IC whale trade isn't the only Captain Condor, David Chow, Inside Options. It's not the only person on the planet Earth that knows after a couple of days of realized volatility being more than implied volatility, that volatility is going to come in. We're going to have a range compression. Also, it's not hard to figure out that if you're selling outside the expected move and you have gamma levels at your back for 1 DTE, it's probably a good idea. And so I don't do this trade all the time, but I did it yesterday. I did it earlier in the day. And I guess there's a small one here for fun, 5 wide. Or where was it? I got $1. What did I get for it? I did it in the room for my subscribers. Hold on. Bill, where is it? It's here somewhere. I got $1.05 for it. Can close it out now for 35 cents. Take the money and run. Or I'm going to try and steal, a little bit more for 15 cents. Well, that's one trade, excuse me. Here's the trade, 35 cents. I'm trying to get, they want 40 cents. So whatever, I can close it out now and make 80 cents per piece. So there's that. And I have this little here. Okay, so what are we going to do now? Here's a 112 NES. We can talk about that one of these days. So what would I do now? Well, let's see. Well, we know we have the IC whale right here in this area. There's a short strike area. So first thing to do, you only talk about human shields. He's going to be my human shield. I'm going to hide behind him. 65 cents for a 10 wide. That looks pretty good. Hiding behind the human shield. I'm putting that in right here, right now. On top, I've got this little fly thing going on here. Would I add at 50? I might add at 50. If I didn't have this here, I'd add at 55. I'd like to be away from the round number. So I'm not going to do it. Actually, I could do it like this. And like this for 95 cents, that looks good. I'll just do it in a different account, so I'm not stepping on myself. So short version is somewhere below the IC whale, depending how wide you like to sell. If you're an iron condo seller, would make sense. If you like to sell tight and 5 wide, whatever, you could go for the a quarter to a third the width of the spread ish, and do something like, like kind of go right below them or somewhere in here. Or you could join them over here at the 20, and something like you'd have to go a little closer on the calls, which I'm not crazy about. I don't care about getting equal premium. I'd rather be safe than sorry. But those are some things you could do. Now let's talk about the butterflies. And apparently, sometimes there's questions about how I pick the strikes and what I'm looking for. And David, not David, who was it that asked? I don't remember who asked, but Richard told me somebody asked about the flies. I don't remember the specific questions, and maybe we'll get to that. But what I like to say is, first of all, I'm typically, especially when I put them on now, not looking to get the pin. I'm looking to get the movement. Where are we going to go? And since I expect we're going to chop around somewhat, we're not going to just like stay still. I like to put in what I'm looking for on the call side cheaper, and on the put side cheaper than where we are now, depending on how we're tilted. And then let the price come to me and fill, and then get out of them sometimes during the day. Usually a 10 wide, I can get in for between 75 cents and $1.10. And, if I get in at 85 cents and get out at $1.20, I'm okay, fine. Sometimes they do a lot better. I'm usually not too patient because I'm busy doing other stuff. I'm not going to babysit these things. And what would I be looking for right here, right now? I'd be looking to sell something right at 6,800 or a little higher, so the belly of my fly would be right up here somewhere. I want to do it cheap, so I would put it in at less, looking for the pullback. So it wouldn't get filled at the open. It would get filled at the pullback. If it doesn't get filled, it doesn't. I'll figure something else out.
So real quick, Doc, you mentioned the cheapy fly. So if you go back to yesterday's stream, not you, Doc, but the viewers, and I'll post a link in here, but it's just a stream from the live stream from the 18th. Timestamp is right around 36 minutes. You did a cheapy fly. You called it a pullback fly, and I just want to reference that for the viewers. If you're looking to, it was just a little teachable moment. So if you're looking for something to review, maybe during the weekend, get a better idea of Doc's reasoning behind playing these. I think you put it on for about 80 cents. Then we got the pullback yesterday morning. We had a 50-point drop, and you profited nicely. Low stress, not a high risk trade, and low stress to manage. I think you were distracted at the time when the market was dumping. You came back, you looked at the fly and said, "Oh, look, I'm up 150%.
Nice.
Let me take the money," and on to the next trade. So I'll post that link for the viewers, and definitely worth your time at a timestamp of about 36 minutes.
Right, and the point is, I'll put these in, like I said. If they don't fill, they don't fill. But the first hour we get enough movement that a lot of the stuff tends to fill, and then I kind of go back around to. I say, "Oh, that's nice." So let's go start. Since where are we? We're kind of in the middle of the range. Thank you for doing that, David. Where are we now? Look for here. We're kind of at the middle of the range. So I'll just put each of these in a little cheaper than they're showing since we're at the middle. Okay, so puts. What am I expecting? What are we expecting to go on here? Okay, so below here, there's really not a lot from a gamble point of view. So at some point, we should accelerate down toward 50. Maybe we get there, maybe we don't, and we could bounce before here. You know, we have this 40 here. So that said, well, now here's where the think out loud department comes. So we can accelerate toward 50, right? Let me do this again. Makes sense. Hopefully you see why that, plus it's a round number, etc. So I want to be long either the 50 or the 55. Let's kind of model it out a little bit. That looks good for 55 cents. 40 cents, even better. I'll take it. Or I'll do another one in the other account. Or I might want to do it more like a 55, 45, 35 for 60 cents, somewhere in here. Somewhere in here. Or, now that I'm thinking out loud to myself, if I want to make it a 15 wide, well, I'm a cheapskate, I don't like to spend money. 15 wide. For 95 cents, this thing is going to be much more forgiving, gives you a much wider tent. I move it up a little bit more. 80, you know, that's not bad. I'm going to throw that in over here. I usually don't like to, you know, for 15 wide, 85 cents is going to be very forgiving. So let's do that as today's experiment. To the top side, because it's probably not going to be a one-way market. It's probably not going to be a trend day, quote unquote. And again, not rocket science, 6,800. Well, we have the IC whale hanging out for us somewhere up here, right? And so
I'll jump in here during a pause in your reasoning here. Ricky shared a little customer testimonial. I followed one of your butterflies yesterday and forgot about it. And on a 15-cent debit, hit 400. So you might want to click on that one and put it up on the screen. Just saying.
Where is it? Where can I say? I might want to click on that.
Just in front of my comments. It's one of the last few comments on YouTube. Or no, he's on X actually. So he's got one of your.
Yeah, I don't even know how to do that. I don't even know how to do that. So I'd have to go to X.
Oh, you do it all the time.
Huh?
No, you do it all the time.
I do?
Yeah, when you put somebody's comment up on the screen, you click on the comment and it appears on the screen.
So I would find it in our Discord. I would find it on X. Where would I find it?
On the stream in StreamYard.
Okay. You'll explain to me how to do it later or whatever, because I'm not really sure what we're talking about.
But the point was made. 15 to 400. That's like bad hombre percentage gainers.
Okay.
Sorry, I interrupted your thought process.
I'm gonna try and get all that better organized. I'm totally YouTube illiterate. Oh, here it is. Oh, duh. Okay.
There you go. That's what you want to be showing on the screen. Let your viewers know. Nice customer testimonial there.
Yeah, and I'm not going to say that happens all the time, but that happens. You know, usually 15 to 400 is not typical, but 85 cents to above 50, $2, $1.10 is not. It's like shooting fish in the barrel.
But also, this market hasn't been typical, I don't think. So I think It's
Good point.
you know,
Good point. And that's,
give yourself some credit, Doc.
yeah, and that's factored into the equation. I might not do these same flies. Today is a different flavor fly than I would have done yesterday.
Yeah.
Today I'm expecting more consolidation day. We had 2 days of realized volatility. Yes, we might bounce around kind of crazy within the bands. But I'm expecting the expected move, 45-ish, to hold. And that's a bullshit expected move because it's on SPX. We'll get a little better expected move here, 37. 40, 35, 40. I expect 40 either side to hold. Probably even less, probably 30-ish. So let's say 30 points. Even 25 points gives us 50 on the bottom and gives us 68, 10-ish, 15 on top. Sounds about right. Sounds about right. And so that's what I'm looking at here. As far as scalping trades, I would just scalp toward here, towards this, 67. Well, this is really the magnet before the open. Afterwards, it's going to kind of change a little bit. If we get over 6,800, pivot to scalp right to the icy whale area on a breakdown. So stalling up here, you get a pretty reliable pullback towards 6,800, or will there be a battle? If we're below, if we're like near the open area 75 and that fails, from a gamma point of view, there's really not a lot to stop us. We also have the 20-day moving average right around here, and that's a line people are going to watch. We have the 50-day down near here, 65-ish. So these are all reasonable targets. Bouncing off or heading towards. And, my bias today is I expect us to close green, not red today.
Yeah.
Would I be shocked if we close at 67, 60-ish? No, but I would kind of be a little surprised. I would kind of be a little surprised if we didn't squeeze out a little green. And that's really it. It's the 9:10. So if there's any other questions or comments, if not, thanks, Rick. Yeah, those.
Yeah, appreciate you, man.
And thanks for your help, Richard.
We will be posting that promo here by the end of the day, so just kind of keep your eyes out for it if you're interested in the program.
Yeah, we have to figure out exactly how we're going to do that, whatever the back end admin stuff, which is not my strong suit, but Julia's helping me and now Richard's helping with some of the little comments and all that sort of things, and how to better help people that are listening understand what I'm saying, because I know sometimes I can kind of get a little
how to give you credit when credit is deserved. So good stuff. Thanks, Selena, for mentioning, liking, and subscribing. Let's get Doc's word out there. I'm sure there's a lot more people out there that will benefit from your wisdom and quantuition. And Selena's a great personality in the Discord. Kevy Kev repping on X. So thanks for all the love you're showing, Doc.
Thank you. I appreciate it. And the way I'm kind of babbling here, you pretty much get all day babble like this with screen share and with ideas, whatever. I already have a few on for the Santa Claus rally, and I will put something else on, and so I'll make sure I'll kind of make that a public thing, whatever, I'll let my subscribers know, of course, and maybe I'll throw it out on X and whatever, and do a little video so people could see, and I think I'll be right. Obviously, otherwise I wouldn't do it, right? And so we'll see. Could I be wrong? Well, yeah, it'll probably won't be the first time, probably. But yeah, I mean, shit, I have some flies on for the year-end rally from the November sell-off. Even through, again, with the flies, even through all, they were up substantially or nicely, and even through this recent sell-off, they're still green. Still up 100, $200. Even with all this craziness, now they're greener, obviously. So you do your flies are very forgiving. I use them more and more. My only problem with flies, I only do 1 or 2, not 10. That's my problem. I go too small because I don't like to spend money. I like to get the premium.
Oh, we did get a question here from Perry. Just, Doc, would you put on a call butterfly for the Christmas rally? I think you already have some on.
Yeah, I have call flies
XSPC.
on. When I put flies on, that's an interesting question. I wouldn't put them on yet. I would put them on, but not here. Not here. I already have put flies on that I put on when we were at 6,900 that I'm taking off.
Yeah, I think he's referencing, excuse me, he's referencing a call butterfly, which I believe you have some on for end of year.
Right. I have one, I think 6,950. I have one with the long strike at 6,950 or 6,900. I have a few different variations. I have one really wide one where I'm selling the 7,000. I think it was a 6,900, 7,000, 7,100, kind of expensive, but chunky. I already took one off. I made about $800 on it. And I have some 25 and 50 wides around that on for the 31st, for mid-January, end of January. I use different expirations because of the way that watch sale rule works. Sometimes if I have a trade on where the long used to be a short, or where I've traded it before, and say the body of the fly was technically a loss, and then it becomes a win, then the watch sale rule comes in and I get screwed. So I just make sure to do it instead of December 31st, January 2nd. Screw me. I mean, sue me. It's the same trade. You know what I mean? It's just I avoid the tax police. And so I'll do that. So I'll stagger them like that, expirations, December 30th. If I have December 31st on, I'll do December 30th. Or if I close out December 31st, I'll do the 30th or January 4th. I'll pick dates around there if that's my target.
And all these trades,
go ahead.
One more plug. All these trades are available in a channel on the Discord. Doc is completely transparent with his trades. And if you're looking for ideas, trade them on paper, see what happens. But you're not going to find a more consistent and more transparent trader. All right, sir. Thank you for your time.
If I remember correctly, and we'll end with this, when you and I first started hooking up, you were paper trading my stuff for quite a while.
That's true. I followed you for a year. I just watched. I followed you for a year, and I paper traded yours among a lot of other traders in another chat. But that was my goal for that year, was to explore different option structures, trade them on paper, see how they work, try and learn more about the Greeks, that sort of thing. And here we are. It's been over 2 years.
That might be an interesting conversation or interview, a little thing. We could talk about that, because I think a lot of people are on a similar journey.
Sure. And
I think your journey is not an uncommon one.
And I think your service caters to those traders. So
I think it's a good definitely match. Right.
100%.
All right.
All right. Well, good luck today, everybody.
All right. I'm going to shut up because I can keep talking. Okay. Have a safe day, everybody. Oh, it looks like we're heading up toward. Oh, where did Doc say? Hold on. Where did Doc say we might settle out? 67.90. Look like the balance area. Okay. Well, I call it a magnet. All right. Just I don't know. Okay. Take care, everybody.